end of all that legal mumbo jumbo means we're ready for another episode of Trade Masters. I love ideas. I love picks. I love Trade Masters. It makes me money. And there's very few things in life. Listen, I'm not, the biggest monetary centric guy, but boy, I like financial freedom and I love freedom itself. Money can help you do that. I got two of the best with us tonight. It's been a while since I've had both of you on. I think you were on both together competing 3 weeks ago. I wasn't here. It's been a bit for me, so I'm very excited to have you both. First of all, we got defending champ. Always going to start with the champ and his down arrow. That down arrow does not reflect his winning streak. Defending champ Greg Holmes on tonight. How are you doing tonight, Greg?
I'm doing very well. Thanks for asking, Mark.
You got 3 winning picks for me tonight?
You betcha. I got 3 bad jokes to go with it. So.
No, I bet you have 2 bad jokes and one that I'm like find really funny.
Hopefully.
And Tyler, looking serious, looking lean, looking mean, looking like a machine right there. It's all business, right now. Listen, you got to turn around. Is it business in the front, party in the back, Billy Ray style, or is it just all business?
It's all business, man. I ain't screwing around. I want the title back.
Listen, I want 6 good picks, or at least a couple that I love to play to add to my own watch list. As always, Greg, we're going to do 3 rounds tonight: Delta round, Theta round, which is cash flow round, and then a wild card. Anything you want, any strategy, whatever it may be. It's defending champ Greg. You get to decide who goes first.
Oh, Tyler's all business. I'm gonna let him go first.
All right, Tyler, Delta, what you got?
Okie dokie. All right. So since I got only 3 picks, I think I can embellish a little bit and build the context around my idea.
Yep.
So we got we know we have strength in the tech sector. Got XLK here, held up very well here recently. Been a leading area in the market. So I like tech. I'm interested in tech. And one of the areas that interests me is semiconductors. And semiconductors, SMH is the chart here, had a breakout attempt of its long-term base last month. Couldn't get it done, got a little slippery pullback. But Mark, it wants to try again. I like the retest here of 257. I especially like the fire back after yesterday's sell-off in the semiconductor space. The weekly chart of semiconductors also looks very constructive. Look at these last 2 weekly bars, big bullish Marubozu candle, I think we call that. Opened at the low, closed at the high.
And I promise you, you do not have to know the name of all candlesticks to become a successful trader. I can't name half of them.
Yes, you do. You got to read Nielsen's book. It's about 1 million pages long. If you can't sleep, read that one.
Listen, I'm just trying to educate the masses, okay? Marubozu, it's bullish. Let's leave it at that. Got a nice hammer candle. So I like what's going on in this space. What I haven't liked in semiconductors is the weak sauce response to earnings. So you take a look at Texas Instruments. This was strong going into earnings, gets whacked. They sell the news. You take a look at Micron. Micron had rallied up into earnings, gets whacked afterwards. You take a look at Taiwan Semiconductor, rallying into earnings, gets whacked afterwards. You take a look at Qualcomm. Qualcomm didn't do a whole heck of a lot on earnings, and it actually sold a little bit. So the theme, despite tech being strong.
I was going to say, this is not the greatest selling point heading into your.
Look.
I'm curious. I'm fascinated.
Easy, Mark. I'm building the suspense.
Okay,
Qualcomm doesn't do that great, and yet the semiconductor space is still sitting around a record high. I think it's impressive that semiconductors developed so well. So with that backdrop, very easy to spot a diamond in the rough. All you got to do is look for the only semiconductor that had bullish response, a bullish response after earnings. How about that AMD, huh? How about that AMD? Diamond in the rough here, up 7.5% after earnings. The Lone Ranger here, I think the only big semiconductor that I'm aware of that had a very positive response to earnings that is noteworthy I think being able to rally in the face of a market that doesn't like semis, apparently on earnings, I think is notable. I think it's a tell, and it makes me want to do something with this stock. So you could see, obviously, today, very, very robust. If you take a step back and look at the weekly chart, AMD has a reputation for rewarding breakout buyers. This has a long history of when it breaks out of weekly resistance levels, it can move very, very consistently. We've talked about this back in the day a lot. And so what interests me here, Mark, is we are now testing weekly resistance, kind of a little cup and handle pattern. Also corresponds nicely with the century mark. You got $100, nice round number. I think you break through that, you're going to get some buyers swarming this stock. Given the momentum behind it, given the potential for a nice little squeeze, I like the idea of a delta play here. And what is also nice is that because earnings came out, what's interesting is didn't get as much of a vol crush as you might expect. I think it's because you had such a big move directionally. So vol is high enough where I don't just want to straight up buy a call, kind of want to offset the cost by doing a call spread. So what I'm going to do here is I am going to purchase a 100 call option, and I'm going to sell a 115 call option. It's going to create a 25 net delta, a little bit more than that. So pretty offensive trade here. I don't think 110, 115 in a couple of months is out of the question, given this stock's history. So I need to give it a little bit of time. Here. I would go to October, actually, and I would buy the 100 call. It's got about a 48 delta. I would sell the 115 at a 20 delta. Gives me a 28 net delta. Paying only $3.86 for a 15-point spread. So the risk reward is very, very attractive. If you take a look at this on the risk graph, max loss 386, max reward 1100. Don't have to go for the max gain. Even if you took it off at 110 or 115, you're still doubling your money. So from a target perspective, 110, 115 is my target. Stop loss. If you want to, you could size, just buy one contract for every $386 you're willing to risk. If you're not willing to risk the whole 386, I'd probably give this a little bit of room. 50-day moving average or yesterday's low would be the two stop areas I'd be playing with.
Okay. What do you say to me? Because I don't have a logical bias, but I have a bias. Because I've played off the lows on AMD and advocated that, talked about it on many shows over the last, gosh dang, how long has this consolidation gone on? A year, a year. So, I mean, I love me a year-long breakout of consolidation at 100 in a stock that's bucking the earnings trend. You sold me on that, because if you didn't, how do you get me over my bias that it's treated me so well off support, stretching, chasing prices higher, like getting me off that bias?
Look, I mean, I would say that if ever there was a time to stretch from cash flow to directional, wouldn't this be the situation? Wouldn't it be a situation where you've got a stock with a reputation of rewarding breakout buyers, knocking on the door of a major resistance zone? I mean, if not now, when, Mark? If not now, when? If you're not going to take the directional play here, then you'll probably never take a directional play on AMD, which is fine. But for me, this checks all the boxes for the time where I would go directional if I'm going to.
At Tackle Trading, AMD has been one of those multi-year darlings. There have been several times over the last 3-4 years we've recommended it. It has been a great company trending in the right direction. Those fundamentals have never changed. Price has, reflecting the increased market share that AMD seems to capture every year. This is a multi-month. This is a year-long breakout, multi-consolidation at a round number. It's hard not to like that, right? Good company taking a year off. Having goodness help if semiconductors actually kick in, right? Like that makes the trade well, it's going to be hard for AMD to lose. Showing strength in the sector, if that cyclical nature of the market at all kicks up in the coming months, which, very well could. You never know. Rotation's a funny thing, but it's showing independent strength. Specificity on trigger. Where do I enter? What am I looking at? Because we've got a big candle coming into resistance. Usually traders like to wait on that. What are we looking at? How would you play the specific entry of this?
Yeah, I don't have a huge opinion on, I think you could take your pick here, I guess is my point. I wouldn't fault somebody for triggering in over today's high. If you get continuation tomorrow, that tells you buyers didn't just show up for one day. They at least participated the next day. I wouldn't mind today's high, which is 98.71. I also wouldn't mind somebody saying, nope, don't want to buy right in front of $100. I want to wait a little longer. Yeah, that's fine. I mean, look, you may get a secondary pattern here, Mark. It may pause for a week before the breakout. You may get a little pullback. If it were me and I was a little bit skittish about going all in over today's high, I would put on a partial position, and then I would be adding into weakness. The last thing I'm going to do, Mark, is trigger in over today's high and get stopped out on a pullback to $95, $94, $93. That is not how I would manage it at all. I'd be adding into weakness if I don't get the initial burst off of the first trigger.
I like that, and I like the choice of instrument here, because when I play off the bottoms, I'm oftentimes picking up shares, right? Big risk. My risk is limited on a directional trade. That's appealing to me. That yes, I'm chasing high, but I'm chasing it from a trading point of view, right? I'm not chasing it from I'm in AMD for $100 from now to the end of time. Good risk reward. There's a lot to like about this trade. This is why I love Trade Masters. Was not on my radar because I got so much other going on my account. This is why I like it. That's a great way to start this show. Greg, you've had a little sketchy internet. Is that Tyler messing with your internet, just to throw you off your game? And you're on mute right now. Tyler's muted you. The Jedi, he is just messing around on multiple levels with you.
That kid will do anything to win.
I see. He's said, all business today.
He's still not gonna, but he'll do anything. So good for him.
Well, he brought a great pick to start the show. One I have, other than my own natural skittishness.
It's not bad for an amateur, but I'm gonna bring out the real pick here. And anybody who knows me knows that I don't go within 1,000 yards of my pick here, but I'm gonna do it anyway because that's just who I am. Let's go to Twitter.
Did not see that coming.
Hey, honestly, I didn't see it coming either. To be honest with you, this is kind of blindsided me, but I just don't have a choice at this point. Let me throw the background out here. I'm not going to go quite as deep as Tyler did down the rabbit hole. But first of all, I don't tweet. I don't even really know what it is. The other thing that I don't really know is how they make money, which they just had their earnings and they made money. So good for them. They've held up pretty well after earnings. A little pause there, but pretty good. What I really like is this level of resistance that we're sitting at here. Right around the 73 level here, old resistance, old support there. Tried to hit it a couple of times since then. We're just within shouting distance of it right now. I like the left shoulder, right head, right shoulder, inverted head and shoulders here. I just think this has so much potential. This particular stock, it's really, even with all the gaps that it tends to have on earnings. This one had, a very small gap in comparison to the rest of them. It just seems to want to go higher. And when it wants to go higher, who am I to argue with it, right? So again, I don't know much about Twitter. I just like the setup here. It looks pretty to me. And it makes for a really inexpensive trade from a breakout standpoint. So I'm not entering this trade until it breaks 73. That's above the high of this candle, or right around the high of this candle, this red candle, this last one to touch there. So this got a day or two to work probably. It's close to an ATR way. But the trade I like the most is the, what did I come up with here? September. I want to buy the 70 call option for four and change, about 410, and I want to sell the 80 call option because that's where I think it can go, and that puts us a trade a 298 debit for a $10 wide bull call spread. As far as I'm concerned.
And Tyler, you are. Greg, your internet's coming in and out here. You know, the wonders of live programming, as they say, right? You know, there is nothing you can do about that.
A low. No, sorry about that.
Yeah, your internet, you're frozen in a very analytical pose too. You know, it's like deep in thought, looking at the chart, breaking it down. That's a game face right there. That's a game face right there. Tyler, give me your thoughts on this, and give me your thoughts. The one thing on trigger that I have concern with, social media stock, right? Social media stocks, Snap, Pinterest, Facebook, all can get trendy together. Facebook down 4% on after hours. How might that affect a gap situation down? Delay the a potential entry for several days if it follows suit with Facebook for a day or two?
Yeah, that's a good question. I don't know how correlated Facebook and Twitter are. Certainly in the short run, if Facebook weighs on tech, I'm sure it would put at least a pause on the breakout. I like the trade idea. I like the strike selection. I think the 70 makes sense. I think the 80 makes sense. You've got really clean support and resistance levels there. So totally agree with that. The cost structure is good. You're paying $3 for a $10 spread. So you're risking 3 to make 7. And the net delta is great. You got a net delta of 32. So the trade structure is great. I don't mind the chart pattern either. I mean, that was the line I had on. I didn't know it was going to bring up Twitter, but that would have been the level I would have taken the breakout over Twitter.
Oh yeah, you already had that line drawn,
Yeah.
right? You already had that line drawn. Yeah. Are you back? Are you back with us, Greg?
I don't know. Can you guys hear me okay?
I can hear you perfect now.
Sorry, I'm going to leave my video off. It seems to be messing with my internet a little bit. So, like I said, the reasons I like this trade is the cost is low, the potential is good. You're risking 3 to make 7 essentially. So you got more than 2 to 1 there. This thing just wants to go. Again, the earnings response was decent. I think this is just a nice, easy little bull call spread with lots of potential.
Okay. And I was mentioning Facebook's down 4% after hours on their earnings. Any worries that, that might delay, I guess, maybe delay an entry or something, put it on a watch list a little longer if social media stocks get caught in the algorithmic, day or two craziness that sometimes happens?
Well, and if you look at Twitter, it's at $70 right now. We're not getting into it to 73 anyway, so that may not happen tomorrow. It may take a couple days, but the ATR on this thing is like 266, so it could be there tomorrow as well. So this is one that you're going to want to set up now. If it doesn't trigger, you know what? No harm, no foul.
No harm, no foul.
It's something I would most definitely keep on the radar, just because of the risk reward potential that's there. And I think it's an easy, like if you look how that fell from 80.75 down to that 73 level, it went there in 4 days. So if we get this break, I think you could be back up there in that quick of time as well. And therefore, the 51-day option gives you lots of time where you don't get too concerned about theta chipping away at any gains you might have. So
final question. Let's say gets caught up in whatever nonsense goes on. Breakout doesn't happen for 2 weeks. Do you go out a month longer in your strike selection if it's getting within that 35-day range? And you push that out to October if we get, if it takes a while to come.
Yeah, if it fires up, I have no problem. Like even if you build the October now, right? If we build the October, you buy the 70, you sell the 80. Well, that's a 75. So if we go to the 80, it's still only costing you $3.25. So it's essentially costing you 27 cents more to do another month. So, even then it's still a cheap trade, right? It's still inexpensive from that perspective. Now, honestly, I wouldn't do this without having a stop loss in there. I would get below all the kind of noise here. Yeah, right where Tyler's got that there, 67, 65, anywhere in between there is a good stop loss as far as I'm concerned. Because if it breaks out, if it gets down there, just close the trade and be done with it. So you're not even risking the 300 anymore. You're still making that potential 7. You could be risking, whatever, $1.50, $1.80, something like that. So yeah, it's, you know what, the only reason I chose September, it's 51 days, which I'm fine with a bull call, especially because this does have an ATR of 2.66. So it has the potential to get up that $10 in a hurry. So I think 51 days is plenty, but if it doesn't trigger for a week or two, then absolutely push out to October. And by then the cost is not going to be as great either. So end of the day, it's going to work out for you.
Round 1 was a reminiscing round. I was reminiscing about selling naked puts at Twitter at $20 last year, in the good old days of 2020. Reminiscing buying off support on AMD. Am I going to reminisce about your joke, or am I going to want to put it as quickly out of my mind as humanly possible? We're about to find out.
Well, whatever. So I went to the dentist the other day, and the dentist says, "You need a crown." I said, "Great, finally somebody who understands me."
I'm a little princess joke. Mm-hmm. Not bad. I don't know. Maybe if it's not bad. Not bad. Tyler, give me a not bad theta pick. So we had some delta picks, both of them choosing bull call spreads, and both had really attractive risk reward ratios. It's always so important in those trades. I love trades where I can lose more than I win, but still win. It's a nice place to be. But we're going to the theta round, cash flow round. This can be naked puts. This can be covered calls. This can be bull call spreads. This can be bear call spreads. This can be, all kinds of things in this round with a focus on the cash flow element. Tyler, what do you got for us?
Yeah, I'm going to go top down again. So I'm going to start with a space that has been out of favor, but I'm going to look for this to start to come back into favor. I'm going to start with XME, which is a metal and mining ETF. These are cyclical stock. These are part of the inflation trade, part of banks, industrials, basic materials, all of those guys. They fell out of favor a bit in June and July. I like a couple of things, though, shaping up in this chart. I like the failed support break. I like the fire back. A little bit of strength today, relative strength, sitting right around the 50 MA. This makes me want to take another look at metal, mining, steel stocks, and the like. So SLX is the steel ETF. This is leading the metal and mining space, has already gotten above its 50-day moving average and holding, like the volume coming in this space as well. So I wanted to zero in the steel industry, see what we got going. And I really liked what I saw in Nucor. This has been a juggernaut in this space. Take a look at the earnings growth. Just bask in the epic growth for a second. 63 cents per share, $1.30 per share, $3.10 per share, $5.04 per share. Think there's a reason this stock's gone from 40 to 110? I think so. You could say maybe it's priced in, but you don't know. Don't be a hater. Maybe it's not priced in. We don't know. I like that the earnings announcement, stuff didn't budge, right? It's like, yeah, made $5. So what? I deserve this big
and on that note, we've seen that. We've seen in this space buying on earnings day. Even Cleveland Cliffs tried to sell off for a minute. That didn't stick. And so we have seen buyers come in on earnings across the board in the entire space.
You're making my point, Mark. What else you got that supports this Nucor bullish? I mean, it's nice. So I like today is the first day that it pushed above the 50-day moving average really since the breakdown, right? So it's one thing to say, I want to buy dips in this space because at one point it was really bullish. It's another thing to say, I'm buying the dip, but it's because it's pulling me in, right? It's demanding I pay attention because it's showing strength that we haven't seen in 6-7 weeks. So I feel like this is what we've been waiting for. It looks even more interesting when you look at the bigger time frame, the weekly chart. This really, in the grand scheme of things, was just a nice garden variety retracement to the 20 weekly moving average. Look at today's bar versus last week's, or this week's versus last week's. It's triggered, right? I mean, this is the most compelling strength we've seen since the pullback. That technically is a trigger already on the weekly bull retracement. So I like where this is at. I like where this is at. And so from a volatility perspective, interesting that we really haven't seen IV budge much after the earnings announcement. It's just kind of hanging around here. It's high enough at the 43rd percentile to make bull put spreads interesting. A little pricey for a naked put, so I'm going with a bull put on this, Mark. And the strikes that I'm playing with are the 85, 80, 85, 80 bull put, essentially betting that the major support at 87.5 or so is gonna hold. Whether this rips to 110 or just kind of holds up here doesn't matter to me. Obviously, I prefer the rip to 110, but I don't need it to make money on this trade. Really just got to have good conviction on this weekly bull retracement holding. For that 85.80, you can't do August anymore. Just too close. So I went out to September. 85 strike, you got a 14 delta. So I got about an 86% probability of profit. Gonna sell it, gonna buy the 80, get a cool 50 cents. It's about what we want as a minimum. It's about an 11% return. And yeah, I mean, potential stop levels, you could ride it to the strike or get stopped out on a break below 87.5. And I would ride this expiration or buy it back at a nickel.
When would you prefer? Because on the stop management, would you on the 87.50? Because bull put spreads you generally want to stop out at some point, right?
Yep, for sure.
They're trades. They're not investments. They're trades, and so trades, equals having usually some exit strategy in the less favorable conditions. Which do you prefer? Riding down to the strike, a break below those early month lows before the thing. Which one?
In this case, it's not going to be a huge difference, right? And so it's hard to argue vehemently for one versus the other. By default, I'm usually the short strike. If I'm going to do the support level, it's because I would be of the opinion that if we take out 87.50, it's inevitable that we're going to have a straight shot to 85. Well, if it's inevitable, you might as well get out at the 87.50 because you'll lose less. When I look to the left of the chart, there is nothing between 87.50
that's when
and 85.
Because I look at those support levels, and it bounces off the 20, which I call the most underrated indicator in technical analysis. Got a clean bounce there like that. But that's it. That's it. So let me play contrarian. What about going a more aggressive, betting that the 20 holds and rising that up? Do I get enough credit to even justify it?
Perhaps. I mean, here's the issue. If you go half a strike to 87.50, you don't have an accompanying 82.50. So now you're going to have to widen the spread width or narrow it. So to keep it at the $5 wide, you got to jump to the 90 strike. You are almost doubling the credit. I think that's enough additional to make it worthwhile.
A much harder trade to manage, though, right? Because there can
at 90 it is. Yeah.
Easily be downward movement, in a skittish market, so, just thinking out loud more than anything here.
Yeah.
Greg, what do you think about this?
Go ahead.
Yeah, I like the trade. I like the fact that it's just pushing up above that. I believe that's Tyler's 50 there. Yeah, I like where the space is headed. When you start looking at the sector, and you can see that this sector's leading, right? And you look at the steel sector and it's already leading. That gives me a warm, fuzzy feeling.
Yeah, it did.
And in this particular case, this is actually a dividend paying stock. And I realize it's expensive, but the reality is if you were forced to buy it at 85, as long as that was part of your exit plan, I would have no problem with this trade whatsoever myself. I'd be happy to get this at 85 and get a $14 discount on the price of the stock, and then start turning in some dividends and maybe some covered calls or things like that. So, there's lots of different ways to play it. You can use a stop loss. You can use, an exit plan where you take possession of the stock. If the steel stays strong, which it kind of looks like it's picking up steam, then yeah, I have no issue whatsoever with this kind of trade.
Good deal.
Yeah.
Any final thoughts, Tyler? I mean, it looks like we have an upward momentum signal. So, entry point really is irrelevant. Would you agree with that? Or
I think it's triggered.
Is there anything that can happen tomorrow that would change your mind? like on an entry?
Well, I mean, let's put it this way. Let's say this opens down 0.5%. I will make the 5-minute chart get into an uptrend before I pull the trigger, right?
That's what I wanted to know.
So if it gaps lower, if it's a lower open, then it's like, okay, like, are you going to keep selling off for the rest of the day, or are you going to continue in the right direction? All I need is this thing to just go above today's high, get in a 5-minute uptrend after the open tomorrow. I think that's sufficient for a trade.
What was the Stills ETF again?
SLX.
SLX.
Mm-hmm.
Yeah. I like how you broke that down, the thesis on this, the industry itself, and then within the sub-industry, within the industry, within the space, and then go and find a good company within that. It's pretty professional, pretty textbook there. Another true professional we have that, Greg, you've been on fire the last couple of weeks with some consumer staple picks and this and that. You've just been spot on your read to the market. It's such a, I have complimented you, Greg, when you weren't in the room in live settings with people multiple times in the last 2 weeks. I just wanted you to know that. I think your analysis has been pretty good lately. Let's see what you got for us in the theta round this round.
All right, I'm getting out of the Twitter world, and I'm going back to my personality and who I am. I want a low, slow, boring type stock that's going to just pay me a bunch of money. And that happens to be International Business Machines. You can pull up IBM for me there, Ty. IBM here, as far as I'm concerned, this setup is fantastic. It's past the earnings. It had a gap up on the earnings. It faltered a little bit, but it's working its way back up there. But there's one.
Did it falter? What day did it falter? Did it falter on the Monday where the whole market was crashing, or did it? I mean, what was that? So that was the Tuesday.
So
after.
it would have been on the 20th where it gapped after earnings. It gapped the day after earnings, pulled back, but it's been working its way higher ever since.
Yeah, it stopped.
So whatever the 20th was, I don't know if that was the day the market.
That's pretty good post earnings strength.
But it held up well.
Yeah.
Right, but honestly, none of that matters to me. What really matters to me is if Tyler can go to the weekly chart, we have something that I call a key level of support. Okay, there are levels of support in trading, and then there are key levels of support. My friends, we have a key level of support. If you look at this from basically early April till now, this hit as a resistance 136, 1, 2, 3, 4, about 4 times there, and it's now shown support at that exact same level. This is a level where, and again, we're talking weekly here, so we got to give it more weight than your daily chart. I love this key level. If you look at IBM, it's just a stock that goes sideways anyway. It's boring. It doesn't do much, right? It has its fits and starts like everything else, but really we're almost at the exact same price we were a year ago, right? Or 5 years ago on the weekly chart here. So it doesn't do much, but what it does do is present us opportunities. I like the key level of support. I want to be below that level of support. And if I can get below that level of support, then I can set up a trade where I feel very confident that we're going to hang on to it. And that happens to be the case with IBM here. So, like I said, I think it's working its way back up. Will it stall at the 50 MA there? Could be. I don't really care, because the bull put spread that I'm going to use, all I really want is sideways, up, or not down too much. And like I said, I'd be happy even if this thing pulled back to 136, because I frankly think that when you have a key level, it's going to hold up a lot of the time anyway. And it did exactly that on earnings, right? It pushed down and it said nope, and it fired back off again. So the trade I like here, very simple one. I went out 30 days, which I always do. My rule is to go closest to 30 days. I wanted to get not only at 136, I wanted to get below it. Okay, so what I did was I went to 135, sold it, and bought the 133, and you're looking at a 34-cent credit there. So for that there, 34 cents, they're going to withhold for us Canadians $1.66. Let's see what that is as a percentage here, 34, 166. So you're talking about a 20% return on a big old boring stock where you're a dollar under a key support level. So for me, this is just an easy peasy theta trade. Show me the money. All it's got to do is not be crazy, which it doesn't have that personality. And I can sit back and collect 20% over 30 days.
All right, I like your strategy selection mostly because it gives flexibility to individuals who might not have the chance to take ownership. You know, too expensive a stock, their account size just doesn't dust of it. The trading strategy is flexible enough for, you know, basically any size account to take advantage of it. All right, break down IBM for me. Let's say, because oftentimes when I don't do bull put spreads often, but when I do, I always keep the, all right, I'm going to keep the wild card to maybe take ownership of this at some point. Can you make me a case for IBM from an ownership, or is this just strictly a trade?
Well, there's a couple things you can talk about there. So first of all, the way I broke this down is I broke it down into a $2 wide spread. We're going to get $34 out of a contract, so you're risking 166 bucks.
Yeah, I like that. That's accessibility.
If you fell asleep, you know what I mean? The most you would lose is 166 bucks. That's usually within most people's max loss wheelhouse. Okay. Now you don't have to do that. You don't have to let it go all the way to the end. But what I'm saying is, if you did, that would be an acceptable exit strategy. Now, personally, for me, I know that IBM is a rock star dividend payer. They have been for years. Fundamentally, they're strong. You know what I mean? They really don't go anywhere and do much. They're kind of one of these blue chip type stocks that just trims along. For that reason, I wouldn't mind buying them, but it is a big price tag at 135. So I could see how that might push people away from stock ownership. But if you look at the fundamentals of this company, they just make money hand over fist. And like I said, their history of dividends is quite good over the last, well, as far back as I can look anyway. So I think actually, you know what the funny thing is? I think if I remember their dividend, I think they started paying the dividends in like the 1800s. They were a typewriter company back in the day, if I remember correctly, which I think is funny. So you could make the ownership for owning a case of this. And on top of that, you get a pretty good premium. You know, if you own this at that 135, if you sold the at the money covered call, you know, you're still getting like right now, let me do a little bit of quick math here. So 210 divided by 141. So you're getting 1.5% on a covered call, right? So, you know, like that's not, you know, nothing to write home about. But if it's a blue chip stock that doesn't really do much, 1.5% per month is not a bad little gig, right?
It's hard to get 1.5% on a lot of blue chip boring stocks right now.
Exactly.
It really is.
And the funny thing about you say that though, look at where the implied volatility is. The implied volatility is low, and you're still getting 1.5%. So if we get a bump in implied volatility, you know, if you get the stock put to you and you get a bump in implied volatility, then maybe you do better than that 1.5%. So there's a lot of reasons why somebody might want to take ownership of this. The only reason that you might not want to is the fact that it's $135 stock. So you're going to have some capital behind you if you're going to want to own it.
Good breakdown. Tyler, what are your thoughts?
I got more, I warmed up to it as he talked. Admittedly, and this is why you got to look at different angles, right? Mm-hmm. Because at first I'm like, it's below the 50, little messy. But what happens is as you go to that weekly chart, as he makes the case for the key price level, the distance out of the money is fine. As you go through those trade metrics, as Greg did, it's like, okay, I see it. Yeah. So I warmed up to it. The other thing is on the dividend yield, your dividend yield is 4.6%. I mean, if I'd be spiking that football if I'm talking about why you buy me.
Yeah, I mean there's some things, and that's why I brought up the stock ownership aspect from a fundamental standpoint. To get my brain processing on that, because when I see dividend yields like that, it catches your notice, right? Yep. I like both. I like how both IBM and your pick both played off the 20 weekly and little pullbacks that we've had in the volatility, but those held. I think that's constructive for the trade as well. Looking forward to your joke. Greg, what you got?
All right, we'll try this one. Three vampires walk into a bar. The first one says, "I'll have a pint of blood." The second one says, "I'll have one too." The third one says, "I'll have a pint of plasma." The bartender says, "Okay, that'll be 2 bloods and a Blood Light."
You know what I'm laughing about is my lack of knowledge on the human anatomy, but I obviously plasma has less density than blood. I wish I was more of a nerd on this one because that's a good joke. I just wish I was smarter.
That's funny.
All right. Listen, and I might not be a blood expert, but I've read a chart or two. I'm excited for wild card round because this can be anything, right? In fact, I think Tyler self-sabotaged 3 weeks ago when he brought up AMC to Matt. Got to know your audience. You got to know your audience. Are you going to go more conservative, or you're like, hey, Mark likes that kind of stuff? What do you got for wild card, Tyler?
Yeah, it's not AMC. All right, lesson learned. Lesson learned. I'm gonna go with I'm gonna build it again.
GameStop.
I've set my sights higher. Okay, no more AMC business. We're going for the cream of the crop here with some GME. So here's what I like. This is for those that watch the options report. That shouldn't be super surprising. I like what's going on in copper futures here, Mark. I like the recovery. This is part and parcel with the inflation cyclical trade as well. Ever since copper peaked, it is no coincidence that this peaked around when the material stock peaked. But this is finally waking up back above the 50 MA, nice little bull retracement. And so I'm taking a renewed, fresh look at Freeport McMoran FCX. Keep this little copper chart in your mind's eye for a second. Even though copper pulled back the last couple of days, FCX did not. When you look at the daily chart on this is the first time we've climbed over the 20-day moving average since the correction began. I love it holding firm the last 2 days. This was up 1, 2, 3, 4, 5, 6 bars. Could have pulled back, but didn't. Just shimmied sideways for a couple of days. I like how it just shrugged at earnings, didn't disrupt the long-term trend in this stock. And I like on the weekly time frame, you were sitting at a pretty significant weekly support zone. I understand this was a deeper retracement. I understand it went below the 20 weekly. I don't care. I don't care because I'm going to do a trade and give it some time to chew through overhead resistance if it needs the time. If copper remains firm, I see no reason why this thing will not go higher. So the vol is low. If the IB rank was really high and I could get far enough out of the money, I'd probably play with a naked put. But as is, I'm feeling a little uppity here, so I'm going to go for the jugular with a more directional trade. I toyed with a diagonal. I didn't like the numbers, so I'm just going to do a vertical spread, bull call, vertical spread. Betting on this getting up towards 40, 41, 42 over the next couple of months. So I'm going to go to the trade tab. I believe I was taking a look at October. I'm going to go to October to give this a little bit of time. Stock's around 36 and a half. I'm going to buy the first strike out of the money, the 37 strike. And just do a $5 wide. Bought the 37. I'm going to sell the 42. That will give me around a 25 net delta, only playing a $1.66. So really cheap trade, cheap upside bet on this thing. 37.42, $1.66, which means you can make about $334. That is, I believe, a 200% potential return. And I'm not asking for this to go all the way back up to its prior high. Only needs to get to 42, which I think is very doable in at some point over the next couple of months if this thing heats up again. So 37.42 bull call, play up the low IV and a resurrection in copper and copper stock FCX.
What about all that overhead resistance? Does that bother you either, Greg? Like, I mean, how do you look at when you're below some moving averages, but you have obvious strength in the, Tyler detailed that in this last pick in Nucor. There's strength, there's frogginess, there's good response to earn. I mean, there's all of the things you like, lining up from a sentiment and price behavior standpoint. Got clean trigger. When you got falling moving averages, do you take those into account at all, Greg?
Yeah, I keep an eye on it. I like the way Tyler looked at this. He's given himself lots of time that if it does run into resistance at that 50, you give yourself enough time that it can work through that. I like the strength in copper. This is giving us a really nice what appears to be a reversal. It looks fantastic from that standpoint. The only thing that bothers me a little bit is that overhead moving average and the fact that they're falling. But you know what, that can change in a hurry too, and especially a couple more sideways days here, and that 50 now becomes flat instead of falling. And again, I just like, if you give yourself enough time for these things to work out, then I think you're fine even with that those overheads. So.
We've had a lot of just clean bounces off support ranges where support might form. 200 rising day moving average here. Horizontal. Exxon Mobil bounced off a horizontal. Small cap. I mean, you got broad things all over the place. Big sell-off, bounces off bottom of ranges. Usually tends to do well in directional aspects. You could go either way, right? I mean, I think you could have went either way. Naked put here. Covered call here, directional. There's a lot of ways you could play this. So yeah, both you and I both liked FCX. I know on our both of you and I both we're like, something's interesting here yesterday morning. So,
Yep.
All right, Greg. Tyler's done.
Yeah,
He's brought all he got.
It was interesting 3 days ago when I bought some FCX calls. All right. Well,
Tyler's done. He's got all he's got.
If I can finish this off strong. So, sorry, it seems like you guys are cutting out. Hopefully you guys can hear me.
Yes, I can still.
Next up for me is AXP. Can you guys hear me? The Zoom is giving me nothing but problems tonight.
Yeah, I think you're chopping in and out, but hearing you mostly, I think. And then, of course, Tyler, do you have a singing voice?
I have whatever the opposite of a singing voice
now,
is
an AXP, is this a rap song stock, or is this a classical opera stock? Is this a Billy Joel stock? Like, what kind of tune would you sing to AXP?
It's got an X in it, so I'm thinking it would be rap.
I kind of rappy, right? Credit cards, cash money, Benjamin's fallen. Like, I could see some rap here, on AXP.
We should take a bet as to what the strategy is going to be on AXP.
You guys hear me?
You're cutting in and out. I'm going to bet he does something. Poor boy covered college.
Can you guys hear me okay?
Not
yeah, we
really.
got you now, Greg.
We got you now. Let's see if it.
All right. So this thing's pulling back after earnings. We got a bull flag setting up. What I want to note here before my internet kicks me out again is all the way from November of last year until now, this thing has gone nothing but up. Okay. It continues to go nothing but up. But every time it's pulled back has been a beautiful opportunity to get into it and then ride it higher. And Mark nailed it on the head. This is not just a directional play for me. This is both directional and theta for me. I love a diagonal spread here because I don't think you can stop this thing. It's a juggernaut. These little pullbacks here have been very lucrative. I'm not saying it's ready to turn around here. It may not. It may pull back to that 50 like it has 1, 2, 3, probably 4 times in the last 4 or 5 months. If it did that, this would make this even more attractive. But if it does decide that the 20 is going to hold up here, I still like where it's at. This thing just keeps going higher, and all you got to do is sit and wait. You know what I mean? It's just, you're it hasn't really violated the 50. You know, it's touched it a couple of times. It really hasn't violated that 50 MA, and I think that's fantastic. We're just now getting a slight pullback here. If you look at XLF, XLF is still ready, trying to break itself back out again. It's showing, you know, it's not faltering. It's not super strong, but it's not faltering that much either. So I think if it gets a breakout, I think AX gets a little boost as well. So a lot of things to like here. Yeah, so we're looking at for that break at 50 on the XLF there, and that would give a boost to our AXP trade. So this one here for me was pretty simple. Diagonal play here. I went with the October strike because I want to give it lots of time. October, I believe. My notes in order here. So I went with the October 15th. I wanted to buy the 170. So I'm going in the money. And excuse me, I like to do these a little bit different as I showed you guys last time we were on here. I like to go back to.
He's cutting out again, Greg. I don't know if you can hear us. So how's he going to build this? I guess strategy, right?
He's going to go with a weekly. He sells shorter term against these. My guess is he's looking at like a 9-day or a 16-day.
Against the longer what?
Mm-hmm.
Which month was the long?
Oh, October 170.
So sell those weeklies.
Yeah,
generate constant credits.
Yep.
And Greg has lost. All right. So my question to Greg would have been, Tyler, entries, right? Because, you know, got some downward pressure, you know, beautiful uptrend, you know, not this, you know, just beautiful and consistent. I mean, what do you look for on entries here?
All right. Can you guys hear me? Did you lose me?
I can hear you now.
Yeah, I'm not sure how much of what I was saying you guys heard. Diagonal for me, October 15th is the long at the 170. Then what I'm doing is I'm going to August 6th, 9 days out, and I'm selling outside the expected move. So I'm selling the 170. Actually, I'm going to go with the 175 and get to about 86 cents for that. So your cost overall with this trade is going to be about 770, 750 debit there. Like I said, I just like the way that this thing's been moving all the way since November of last year.
You've brought up AXP numerous times in various programs in the last 6-7 months. So, I mean, it's treated you well personally, right?
Well, but I don't think you can argue with the chart. Every time it pulls back, it just keeps
I think it's treated
higher.
Everyone that's done a lot of trades well.
And so with that, with a diagonal, you're giving yourself all the way out till October, which is plenty of time. And you can sit there and collect credits if it decides to trim sideways, which it doesn't really like to do that, maybe once in June there. But, you know, the pullback, like I said, for me, I'm getting in above the high of today's candle. If it gets high tomorrow, that's one to go. If it pulls back another 2 days to that 50 MA, I'd be super happy with that too, because that would give you even a better opportunity to get into a diagonal trade here. That's my wild card.
I had a backup joke ready just in case you didn't come back, Greg. I was just like, we got to finish with the joke. So I went and got my best dad joke.
If you can hear it.
But I'll save that for another time.
Nice.
You know, so I want to hear your joke.
Sorry, I can't hear you guys.
Okay.
Zoom sucks.
It's okay. So Tyler, what do you call
short Zoom?
What do you call a fish with a bow tie?
What do you call a fish with a bow tie? I don't know my fish vocabulary. I don't know. What do you call it?
Sophisticated.
All right, I got a better one than that.
Let's hear it.
All right. My wife asked me to sink her phone the other day, so I threw it in the ocean. I still don't know why she's mad at me.
Oh, sink her phone. Fair enough. Fair enough. Listen, Greg, we got you in 30 minutes on Mind of a Trader Night, like we try to do every Wednesday night with you, where you go and answer questions. Greg, I took off the schedule 1 week because we had a packed, schedule, moving things around. I got so many complaints. I ain't never doing that again. People like the ability to come and chit chat and ask questions at night. So we got you in a half hour. We got Tyler as the winner tonight, though, because AMD, you play every breakout of AMD always. AMD just like I love that trade so much on the strength of that. Play breakouts on AMD, and you especially play breakouts on AMD after 12 months consolidation. So Greg, I think you've won more times than ever, Greg. I always hate this part. I hate choosing winners. My personality, right? Lots of good trades. Put IBM on my radar. I like that. I need to start taking some cash flow things on those AXP and those things. You've been killing it with those poor boy cover call scenarios lately. They've just been fantastic. And you know what? I keep betting on a winner. So I don't know if Greg's internet. I don't even know if he hears.
Oh, and not put the love fest. Look, you don't need to feel bad about making the right choice. You should feel good.
So Tyler, as a winner, you get a final word tonight.
If I had better internet, this wouldn't even be close.
I should mute him just because I'm the host. That's okay. No, I loved all the picks. I did like mine. AMD, Nucor, FCX. Let's see what happens. But I would be very pleased if we get an awakening in those cyclical stocks because of what it means for what the backdrop of the market, the sentiment. You get steel stocks coming back, you get FCX coming back, you get semis coming along, and I think the Russell 2000 would head back to its highs. So I would love to see that. We'll see, but I think the charts are giving us reason to pay attention in those areas.
All right, everyone, thanks for coming out tonight. I love this show every week. Gives me great trade ideas. This week was no separate. And I do like IBM on my dividend radar again. It's been a while. She's back on. I'm going to go dive into that earnings report a little bit more. But one thing we do every day is we dive into all the market. Big earnings week. Check out halftime report tomorrow. Recap of Jay Powell. Punting till some future day in the future to do something. They'll break down Jay Powell's speech, Fed market reaction, Facebook earnings, which are down after hours. You never know how it continues. Lots to cover on the halftime report, so check that out tomorrow. Halftime report, Matt and Tim. And I think Greg's going to do his buy one, hold one, sell one, dump one.